Money Show.
Personal Finance with Warren Ingram.
Warren Ingram is a director at Galileo Capital. He's a personal financial advisor and very kindly on a Thursday night gives us most Thursdays of his time to share his wisdom and his experience. And he's always eager to take your calls on anything that takes your fancy when it comes to personal finance. Any questions, any conundrums, any problems that you have, give us a shout. You can do it via the phone numbers of 011 883 0702 or 021 446 0567 or via WhatsApp or old-fashioned way, via SMS. I saw somebody the other day posting a comment saying, I was, had to SMS someone because they don't have WhatsApp. And then I was waiting for the blue ticks and they never came. And that's how we've become so used to newer technologies. Warren Ingram, there's a lot of noise, and there is always a lot of noise, but there is a cacophony of noise at the moment that is leading to a really unfortunate trend, and that trend is those that can afford it, or those who think they can afford it, or those who probably can't afford it but want to do it anyway, are very seriously considering leaving South Africa's shores and trying their luck elsewhere. The trend of emigration is, I don't know if it's quite at pandemic proportions, but certainly it's elevated.
It is elevated, and it's interesting, thinking about it before tonight, that we seem to hit this almost in cycles on the show, and I think it sort of peaks when we feel at threat, and sustained periods of load shedding, around the country, and then water shedding in Johannesburg in particular will do that to people, and the sense of hopelessness and lack of control over your immediate environment are real concerns for a lot of people. And I think, very often, not limited to parents, but very especially parents will look at this and just feel that they're not, in a position to look after their families correctly. And so, immigration, then moves kind of higher on the agenda and higher on the rank of concerns for a lot of people. Add market volatility and everything else, and fear levels are high and rising, and then immigration becomes a real topic of conversation again.
As one of my favorite authors, the man who wrote Factfulness, Hans Rosling, says, you cannot make decisions if your mind is clouded by fear. So let's put fear aside, let's put emotion aside, and let's look to the facts of the issues that surround individuals, families that are considering immigration. Is there like a 10-point, 100-point, 500-point checklist?
Yeah, I think so. I think it's firstly to understand, at its core, what are your real reasons for moving? So to be frustrated and to be angry and all of those things are human and natural and understandable, but you need to distill that and get to the point of saying, if I get on an airplane and I relocate myself and my family to the next place, whatever that next place is, what is it that I'm hoping to achieve, and then be very clear on whether that is actually possible and whether you will achieve a better standard of living if that's what you're looking for. A lot of the time people will say, well, we're moving for the children. We want to give our children a better life, and it's a fantastic motivation. The truth is, if you're moving from, a 200 square meter home, or 400 square meter home, where your kids are at great schools and well kind of catered for and live a good standard of life, and you're moving the entire family into, an 80 square meter apartment. The kids are going to, rather large public schools, and everyone takes a massive step backwards in standard of living, and they will now be permanent outsiders, permanent foreigners. Are you doing this for their lives? Are their lives going to be materially better? And it's questions to ask yourself, not to say that you and I are going to provide them the answers on a show like this.
Those are psychological issues. Those are choice issues. But there are unfortunately unavoidable facts in this process that you have to consider as well. So let's say you have the desire, you have the wish, you have the motivation. You think it's going to be better for your family. Let's accept that you believe that. Then you got to look at the financial consequences of doing so. You may have a very nice job on the other side. You may have take a business with you, whatever the case might be. But the process of doing this, there are consequences on multiple levels, from taxation to transfer costs to moving costs, all of the stuff that you kind of think you know, but you probably don't.
True. So I mean, one of the immediate things is if you're doing the immigration process, and immigration is twofold. One is, and it sounds funny to say there's two parts to immigration. The one is a physical thing. You move yourself from country A to country B, but in the South African context, there's a financial immigration as well, and that's a very kind of tricky, complex process that you have to go through, and that entails, actually informing SARS and going through a process where you declare that you are leaving South Africa, and you're changing your status as a South African taxpayer to a taxpayer elsewhere. And the most immediate and most important consequence to understand of that is that financial immigration means that on the day you financially immigrate, and let's just say it's tomorrow, so it's the 14th of October, that SARS will say everything that you own that is outside of a retirement fund, it is deemed that you have sold all of those assets. So whether you have a big portfolio of investments overseas that you're never planning to sell, property in Malta or anything, whatever it is that you own overseas and in South Africa that's not in a retirement fund, SARS says we now treat that as a sale of assets, and therefore, if you've made profit, you are now liable for capital gains on all of those profits that you may or may not actually have made at this point in time. So includes your private your primary residence, if that's your home in South Africa. All of those things are deemed to be sold on a day, and that catches people out very often, because they just would say, well, hang on, I'm only selling my house in June 2023. That's when the tenants move out. I'm not selling my overseas investments. It doesn't matter. Financial immigration, it's a trigger, it's a legal trigger, and it says you are now liable for tax on that money. So that's a real cost you have to plan for, and you have to have the cash available to pay that tax. It's SARS doesn't change your status if you don't have the cash to pay the tax. In addition, they're going to say to you that your retirement funds, you might have a provident fund, for example, at the company that you work at, and you decide I'm going to send that money overseas. So that means that you're cashing in a retirement fund. We've spoken many times about the huge tax consequence of that, because it means essentially you're going to give away probably half of that to tax as well. So that's not capital gains tax.
Now again, this is important. Okay, because capital gains tax is one thing. You bought your house for 1 million rand 10 years ago, and you're lucky enough to sell it for 4 million. You've made a 3 million rand capital gain. You've got to pay capital gains tax on that, and there's a calculation for that. Your retirement fund, and you think, oh, good, I've managed to put 3 million rand away over 20 years of work in my company retirement fund. I can simply cash that in. So I've got 3 million from the house. I've got 3 million from my pension fund. I'm 42 years old, maybe slightly older. I'm 45 years old, whatever the case is. I've got a 6 million rand head start when I get into foreign jurisdiction B. Except you haven't calculated that you're going to lose 20% of the capital gain on the property, so you get less than the 3 million there. And the reason you're getting taxed to death on cashing in your retirement fund early is because you've been given a great big fat tax benefit in the first place to put your money away in that retirement fund. And SARS is saying, well, you no longer are exercising the purpose of your retirement fund. You're not taking the money for retirement. You're cashing it in. So therefore, the rules say, for whatever reason you cash it in to buy a Bentley or to move offshore, well, unfortunately, that then is taxed at the highest marginal rate, which is, 45%, right?
Yeah, so let's just take the 3 million rand example. So essentially what happens is that 3 million rand that you've cashed in gets added to whatever other salary or taxable income you've earned in this year and in this tax year, and therefore the likelihood is you are going to give away 45% of that to SARS for the luxury of accessing your capital. So quite right. You are just plan on half of your retirement fund disappearing for tax. In addition to that, other retirement funds, let's say a retirement annuity, you might not be able to access for 3 years after you've financially immigrated. So there, there'll be a hold on that until 3 years have passed, and then you can access that money, and then there'll be a tax applicable to that as well. So tax is an enormous consequence, to changing your tax status in South Africa in this financial immigration process. As you said, at the start, there are so many other costs as well, because relocation is really not a cheap exercise either. To move your stuff from here to somewhere else is going to cost you a lot. Most of the time, South Africans, they find themselves having to sell the bulk of their furniture initially in South Africa, and particularly if they're moving to a place like the UK or Europe. When they arrive, they find that the bulk of their furniture doesn't fit into the properties in those places either. And so they end up having to get that taken to the dump, because they simply, the furniture doesn't fit in the house. And the number of stories of South Africans are with that story.
You'll remember Garth McKenzie. Now, Garth McKenzie was the guy who started Traders Corner, and he relocated with his family to the UK about 6 or 7 years ago. And he wrote an entire letter, "Dear South Africans, don't do what I did." And one of the things was, don't take your furniture. It won't fit. It won't fit. It simply won't. Don't do it. So sorry. Yes, it reminded me of that.
So sell all your furniture, and that you'll get, cents on the rand. So, whatever it'll be, for every 1,000 rand that you spent, you'll probably get 100 rand, back in the pro. And then on the other side, because you've got no history, credit history or track record in that country, landlords tend to want to buy tenant insurance, and those insurance companies need to do a risk assessment on you. And one of the things they will look at is your credit history and credit track record in that country. If you have none, what I'm hearing from South Africans arriving in the UK at the moment, for example, is that they are being obliged to pay a year's worth of rent upfront as a way of giving the tenant, the landlord's financial security that they're okay. And so that's an expense you're going to need to budget for. And another warning, properties for rent are really hard to find. So you're going to need to be really quick on that, and probably pay up more than you wanted to anywhere. And property rental costs overseas way higher than South Africa as well. So the financial costs just keep escalating, and then obviously. Make sure you've got an emergency fund for all the expenses that you won't be able to foresee, setting up a new house, in addition to the furniture and everything else that you're going to need to buy new when you get to the other side.
Yeah. Okay. So anybody going? No. Okay. Excellent. I mean, those are the practical realities of it, Warren. I think we can wrap this part of the discussion up here, and just be aware of the fact that there are tax consequences in your cash. There are consequences of moving. You think you've got assets that are worth a fair amount of money because you paid a lot of money for them. They are worth what somebody else is prepared to pay you for them. That's all they are. Really, that's it. Question from Ellie this evening. Current market conditions are really scaring me. You're not alone, Ellie. Gold has always brought me some peace of mind. You're not alone, Ellie, although you should be. Do you think it's wise to invest a portion of my portfolio into gold? And then how best to invest it into gold? That's a good question too. So that with Warren in a moment.
The Money Show.
Personal Finance with Warren Ingram.
Currency's falling on its face. Share markets are 8,000 points off their record highs. Gold is nearly R1 million a kilogram. And naturally, when things go pear-shaped, people start to say, oh, hold on, I need to protect myself against the chaos and disruption around me. And Ellie is thinking about gold, Warren. In principle, not a terrible thing to be thinking about, right?
In principle, you're right, and like in financial markets, it's a bit like short-term insurance. It's a bit like insuring your car or your house or something like that. And the critical point there is you need to buy the insurance long before you crash your car or your house burns down. You can't buy it afterwards. And so looking at gold. Let's just say, for argument's sake, maybe halfway through a stock market crash, or maybe 3/4 of the way through already, and potentially the worst is, now or nearly done, might not be your best call, Ellie. I think, if we look at, I always like to look at the world's wealthiest families, those that have been wealthy for 2 or 3 or 4 generations to see how is it that they invest their money, and they tend to have some gold, in their asset base, and it's usually in the region of about 5% of their entire investment wealth. Whether it be physical properties, businesses, shares, bonds, cash, that 5% of everything they own might be in gold and silver and potentially platinum, and even in the physical form, it might be in bullion sitting in safes in mountains in Switzerland or wherever they keep it. But that's generally the maximum. They won't, for example, go and take a third of all of their assets and commit it to gold. And the very simple reason is that gold is a nice form of insurance in most market conditions when things are going really badly and uncertainty is at its peak. But the problem is that when that uncertainty starts to end, and I'm not saying it ends completely, but just starts to end, you find the price of gold collapses quite quickly because it doesn't generate rent, doesn't generate interest. It doesn't pay you a nice salary every month. It simply sits there costing you money if you own the physical gold to store it somewhere, and if you own it as an exchange traded fund, for example, there is going to be some sort of management cost. So then it becomes a dead weight on the rest of your assets. So I would say, for people that are in a position where they've got sufficient money across all of their asset bases, covering all of their expenses, etc., then owning some gold or some physical, commodities, including gold and silver and the like, makes sense. But it would be a small portion of my portfolio. But if you're young and you're trying to build up your wealth over long periods of time, you should be looking at these market conditions that we're in now. And your eyes should be wide. You should be greedy. You should be rubbing your hands with excitement to say, I need to find as much money as I possibly can safely to be buying these assets now that everyone else is selling, because the sale is on. And that would be my one comment, Ellie. We don't know your age or your financial position, but if you're young and you're saving and you're accumulating wealth, buying insurance now is not the thing to do. Now's the time to be buying quality assets at a great discount, because that's what we face right around the world. In South Africa and globally, world markets are below their long-term average prices, which means buying them now is going to be massively rewarding for the next, 5, 10, 15 years. And gold won't do that. Gold's not at an all-time low now, and it's certainly not going to be shooting up as the world comes out of this current state of fear.
Warren Ingram, nice and succinct. Thank you, Ellie. I hope that helps you. Thank you very much indeed. And be careful on things like Krugerrands and stuff, unless you have a safe custody place to leave the things. Having stuff like that at home is a risk. If you have to buy some gold, there are exchange traded funds that can buy physical gold. There's the new gold product from ABSA, which is not so new anymore. It's about 20 years old, but it's been very successful. You can do some of that. But Warren's advice, as always, is paramount. Thank you very much indeed, Warren Ingram at Galileo Capital.